Good morning. Today we're here with David Peerboom, financial advisor with New York Life. Hi, David.
Hi.
Thanks for being with us this morning. What I'd like to talk about today is really planning for long-term care. We all know the statistics that 10,000 people a day are turning 65, and obviously we're living longer with medical technology, and so we have to be concerned about that. How are we going to pay for it? In your experience, what do you think are the top 5 mistakes that people make when they're planning for long-term care?
Yeah, well, definitely in retirement planning, the one area where I found has been the most overlooked is long-term care. Consistently, when I'm talking with people, that tends to be the most, I think, neglected area of their overall planning. And I think one mistake that I pretty consistently see is that people tend to underestimate the overall amount of money they'll need for retirement, in terms of the amount of income that they'll need in retirement, what level of assets they'll need to provide that income. So if a long-term care event happens, it's even that much more detrimental to them if they haven't done proper planning with respect to, what level of assets should I have, how much money do I need to provide, the amount of income that I'm going to need for retirement.
Because that's even above and beyond just the money you're going to need for general retirement.
Well, that's just it, yeah. So people tend to underestimate the amount that they need just to get by. So if you add on top of that a long-term care need or event that takes place, it can just be really, really detrimental. And something else that I've seen is that people don't really understand the impact, the financial impact of having a long-term care happen in their life. They think, okay, well, if something happens, I'll take care of it, we'll have to pay for it. What they don't realize is that the care can be anywhere from, $80,000 to even $100,000 per year for full-time professional care. And that's just more of an education thing. People just aren't aware. I think in a general sense, people know, healthcare costs have gone up, but to really quantify that in terms of cost annually, most people do not understand how much it can really end up costing.
Right, those numbers aren't out there. People aren't even exposed to them.
It's not something that's all that advertised, no. And then oftentimes I found that people just don't have a proper understanding of just even how long-term care works. A lot of people are under the impression that Medicare will cover their expenses of long-term care. And there certainly is. I'm not a Medicare specialist, but there certainly is provisions within Medicare in terms of there's a 100-day period, but Medicare was never designed for providing full-time long-term care costs. It wasn't built for that. So that's just probably, again, an education thing where most people just, if you don't hear about it and you don't look into it and research it, then you just won't know those things.
Right. If you haven't had a parent maybe who's gone through it, you just don't know what's involved.
Yeah. And I think one of probably the biggest things too is that people they just don't understand this idea of longevity. To say that that's a problem seems kind of odd because obviously it's a good thing that we're living longer. We've made medical advances, but one of the biggest problems and challenges that people are facing is that they're living so much longer, which is a great thing, and it's a really good thing. But invariably, if the longer you're alive, there's a longer period of time in which something can go wrong. So just purely statistically speaking, if you're alive for longer, there's definitely that chance that there's room for something to happen or go wrong in that time period.
So people aren't getting the information they need, and people aren't understanding all of the issues that are involved. When is a good time for them to start thinking about planning for long-term care?
That's a hard one to answer. I think it's personalized. Everybody's got a different situation. Everybody's life story is different, and their finances are different. So I think it is going to be pretty personalized. I would say, generally speaking, if you had to put a number to it, probably somewhere in the 50s. Around 50 years old would be a good time to at least start considering it. Just financially speaking, if somebody looks into getting some sort of an insurance product in their 50s, let's say, versus their 70s, even though they're getting it maybe 20 years earlier, they could be spending less money over the entire duration of their life, just because, of course, premium costs are connected to someone's age. So the older someone is, the more expensive the premiums are, and the younger they are, the less the premiums are. So.
And in the past, there have been these long-term care insurance policies where you pay a certain amount and then you're getting a premium paid, maybe a per diem or a monthly. And we've heard a lot about companies not providing those kinds of policies anymore, just based on them underestimating how long people are going to live. Are there new ways to provide for or to plan for long-term care?
Just in terms of like the type of policy?
Right. Policies that are available, different types of long-term care insurance that might be out there.
Yeah, I mean, I would say, I guess, the best way to maybe just answer that is just to say the company is important. There's, I mean, a whole host of companies, big name companies that have had long-term care insurance products that are no longer carrying it. They've done one of several things. A lot of the companies have just gotten out of the business altogether because they couldn't, it was too good of a deal. they were providing too good of a deal. They were just vastly underestimating the cost of long-term care. So they got out of the business, and other companies have decided to just do enforced rate increases on a very regular basis, and that's published information. If anybody goes to any different company, they will have a history of what their rate increases have looked like. So I know, like with New York Life, for instance, I'm not captive to their products. I can place other products, but I know with New York Life, I've heard the prices are a little higher than maybe this company over there, and sometimes that has been the case. But we've had a history where we just have not increased rates like other companies have, and we've priced it, I would say, accurately. So I think that's a big part of it, is just having well-built products that a company can stand behind without having to raise those rates frequently.
What if I'm 60 and I really haven't done any long-term care planning? Are there products out there, or are there planning techniques that are available to me that could help me if I'm thinking, okay, I'm 60, I've waited too long, what can I do? I might need long-term care.
Well, I would answer that first by saying, if you're 60, you haven't waited too long. I've actually, I've worked with people in their 70s that have gotten long-term care products, because really it's more of a math conversation. It's saying, okay, if I've got $1 million in assets or $500,000 in assets, it's a question of, do I want to take 1% of that or 0.5% of that to protect the whole amount of it. It's a better deal if you get it in your 50s, but it's still still later in life sometimes can make sense, especially when you look at the statistics of the amount of people that, if you look at a married couple, the chances that one of them will end up needing a long-term care or having a long-term care need is well into like the 70% range. So it's just statistically one of the most highly used insurance products out there. I'm not sure if that answers.
Oh yeah, so better to plan early, but if you've waited too long, there's still hope.
There is still hope, and there's also different products altogether that are kind of like hybrid products that work really well too, that are like a combination of life insurance and long-term care insurance kind of combined into the same product. And I won't get into that now because they get complicated, and there's a lot of different products that work in different ways, but there are other options even aside from just getting a just traditional standard long-term care product.
So all hope is not lost
That's
at
right.
60. Great.
That's right.
That's good to know. Well, if you had a magic wand and you could change anything about the way people do their planning or the way planning works, what would it be?
I think probably just that people would realize that they probably need a higher level of assets and would start planning earlier. People would realize that they probably are going to need more money in retirement than they think they're going to need. I think that's going back to the longevity thing of people are living longer. It's strange to say that the biggest problem that people are facing is the fact that they're living too long, but in reality people are outliving their assets. Because people are living so long, it's just their money's simply just not lasting their whole life. So if they would just realize that, if you look back when Social Security was first implemented, life expectancy was in the 60s. And now if you look at the statistics, I mean the chance that married with a husband and a wife, the chance that one of them will live into their 90s is 50%. There's a 50% chance that one of the husband or wife are going to live into their 90s. So it's just staggering. I mean, it's just changed so much, which that's a big difference with regards to planning. I mean, that's a big change to have to compensate for. So if people just realize that life expectancy is so much longer now, that there's a good chance that they'll need probably more assets than they think they'll need.
Right. And certainly here in West Michigan and everywhere in the country, there are hundreds of financial planners.
Yeah.
What sets you apart?
Well, there's a lot of good ones, so I'm not going to say I'm better than everyone, but I think the one thing that I try to do with my clients, and I think the reason a lot of relationships with financial advisors and their clients fail, is because expectations aren't set up front. So I try to early on with my clients set what my expectations are of them, but then more importantly, try to understand what their expectations of me are. How long do they, or sorry, how often do they want to see me, or how frequently do they want to hear from me? And just asking them questions, even simple questions like, what do you care about? What's important to you? With respect to maybe your investment portfolio, what is it that you want it to do for you? What are your expectations even just for your investments? Because without me knowing what their expectations are, the chance of me meeting their expectations is pretty low if I don't have a good understanding of what it is they're expecting of me. So just I think early on trying to set expectations on both sides.
All right. Well, David, thank you for being here today. David Peerboom, New York Life Financial Advisor. Thanks again.
Thank you.